Well, hello everyone. Thought I'd stream this morning just because, well, I'm not looking to trade, so instead of just recording tape reading, I said I might as well just stream it. But I won't be doing this regularly. Only when I'm just tape reading, I'll probably try and stream. And if anyone wants to come in and ask questions, I'll be reading the chat. But right now, 9:30 just opened up, and I'm looking for, like, I'm seeing we're in a little bit of a range right ahead of the 9:30 open, so I'm marking the high and low. We've had this attempt during London to go lower, and we slightly got beneath the low and rejected higher. So there are relative equal lows which have my interest. I'm not saying this is the draw. There's also the relative equal highs, but I think with what's happening right now, we could possibly head up a little bit more, have a 30-minute fair value gap here the price could reach into. There's some order blocks here on the hourly chart, and nothing else on the small hourly imbalance there, but not very significant. Basically, if we run up above that consolidation, I could go in and I'd be placing, if I'm taking a trade, it'd be a paper trade. Just for the sake of the stream, I won't be trading live funds today. Yeah, hey, ODST, I'll put the sound up. 85. Alright, my mic was really far from me, so this should be better. Let me know if this is better. Just my mic was really far from me, but I think it should be better now. Okay. Give me a second. Wait, you said that's better? Okay, hold on. Alright, wait. Can you confirm you can hear me as of 9:36? Because my mic unplugged and I can't hear myself on my stream. That's probably because my output is, yeah, it's on the wrong thing. Yeah, there you go. Okay. Hello, Sunil. Alright, so just keeping in mind this consolidation pre 9:30, so the gray area. I'm not going down to any lower time frames yet because we haven't had a 15-minute draw, but we're about to here. So I would be like paying attention just to the high and low of the consolidation. And what I want to see as we're coming down here is not just a quick draw and then retracement higher. I'd like to see a little bit of time spent in here. So there's a lot of gaps to the left that we can look at, like an hourly gap. I'll highlight the order block. And this doesn't have to work because there's relatively close down here. I don't have high expectations for this morning, but if it does work, I'd want to see on the 5-minute chart this candle close and the next candle kind of spend a little bit of time around here underneath these lows to create that sort of order block. I don't want it to immediately run. Well, it can, but just for me to look for my setup, I want an order block to form, a little bit of consolidation, and a 5-minute short-term low preferably to be ran out to create that breaker down here. That's what I'd look for. But we're gonna wait till that 5-minute candle closes and for the next one to kind of open up. Let's not do that. Let's stay on the 15-minute chart for now. Yes, I can confirm I hear you as of 9:36. Perfect. We can hear you, sir. Those relative lows you have marked, was the pool already purged? Was this already purged? So, yeah, we came beneath them by a couple ticks. But think about support and resistance traders. They're still going to see this as support. It didn't go beneath it very much. And if you take away the wicks and just use the lines, you'll see how, zoom out, this still looks like support. It over here, like this support looks broken, right? Because we went way above it. So I often want to see a close beneath the wicks or the other bodies, like significantly lower, so that it really shows that, okay, yeah, it really did. Like, look back over here where we closed way beneath here. That right there was obviously broken support, and that's what I want to see. This isn't convincing to me that this was a purge. And yeah, do this setup work in Forex? Well, yeah, this isn't really a setup. I'm just talking about algorithmic price delivery. It works in any market that has liquidity in it. My setup is, yeah, well, it will work alongside the algorithmic price delivery. But I can take a look at Forex too if you want me to. There is SMT as well with those lows with ES. Yeah, so S&P, well, actually, not really. Oh, you mean the higher low? Yeah, but also look at the bodies. Right, they basically look the same to me. The Dow is never. I don't like the Dow. Like this isn't convincing SMT, convincing support and resistance. So that's why I'm keeping that area in mind. I don't even want to bother to look at the Dow. Yeah, let me look at Sunil. You want me to look at Forex? I'll talk about the dollar, and then you can use what I say about dollar on the euro. But dollar, I want the buy side liquidity. I've had this on my chart for months, and dollar finally got out of the consolidation. So usually when the dollar trends, you get really good markets. Right now it's trending higher. There's a weekly, I believe this is a weekly order block. I want it to become an area of support above this fair value gap at the high there. So we're going to get that now. We seem to be hitting that consequent encroachment, 50% right there. So we hit that 50% mean threshold here of the reclaimed order block. So from here, I'd just expect higher prices. And I'd like to see an expansion today, which would probably support lower price bias for indices and foreign currencies, because the dollar would be being priced higher. So anything priced in dollar would be, it would be easier for it to go down than to go up. we have the same situation with the relative equal lows. That this doesn't have to get hit. It can come back down. But we've already had the big expansion, actually 7 a.m. mini expansion, so it's probably running out of steam right now. I'd be sort of done with anything forex today, because it already made that 2022 model in the morning during London, and then continued a second expansion 8 a.m. It might just be retracing into the range, or might run a short-term low on the 15-minute chart, possibly. Let's see if there was SMT with the euro at the highs. Yeah, so there was a little bit of SMT. I always look at the inverse dollar. No. Oh my. Not bad. So, hourly chart. You see the inverse dollar is just DXY times -1. And you can see the SMT quite well at the highs there. Actually, doesn't look like it had much SMT. The dollar, inverse dollar, looks different sometimes than the actual dollar. But let's see what ODST said. My initial draw is that we are truly bullish, and that weekly imbalancing is going to hold price. Then we today might rebalance yesterday's range. Yeah, this is a good idea. So you're saying that down. Hold on, let me go back to there. You go. So you're saying we rebalance the previous day's range. Let me just turn off the executions. So yeah, you're saying that we kind of rebalance previous day range. Yeah, that's possible. We could completely balance out. If we balance out this candle and we don't trade into this gap up here, I'd see that as an immediate rebalance, and that could prove much lower prices. If we want to go higher for the rest of the week, looking at how the news is placed, high impact news, Thursday and Friday should be a reversal day. So we could go higher today and then see a reversal Friday, Thursday. Either one of those days can be a reversal, or we'll go lower and then we'll reverse Thursday, Friday. But yes, today, my draw is honestly either side. Either we go higher, go to the buy side liquidity, or we go lower towards the sell side liquidity. I don't have high expectations for today. I'm just looking at price action. We seem to have dipped down beneath this low, this consolidation at 930, and making our way to the highs. So a lot of fair value gaps. I think we're gonna have to come back though into this area down here later this morning, or eventually, because I don't like how light the sweep was over here. By the end of this week, I'll have a clear draw whether or not we close within that weekly imbalance. Are you talking about which weekly balance are you talking about? Are you talking about this one right here? Like, are you saying it's possible this week we close outside of it and sort of inverse it? Because where is this low? I don't know why it's not showing. Yeah, okay. Yeah, with the news, maybe. My current bias on NQ is I always use the IPTA data ranges. You see them at the top right there, 60, 40, 20 day. And I have a 20 day look back, 20 day look ahead. So inside the 20 days, and I could do 60 days too, but right now I'm using 20 days. Inside the 20 days, I look back and I see, okay, what can I target within the 20 days from discount pricing? And beneath 50%, there's this fair value gap there, there's the order blocks here, there's this order block there. So this would be more of a propulsion block, but that's sort of where my attention is. Does it have to happen this week? No, actually, but I think July we're definitely going to try. I'm not saying it won't happen this week, but I think in July I really want to see it try and retrace deeper before making another run higher. And then from there we'll see. I don't want to get too ahead of myself, but yeah, right now we've been in a premium on the IPTA 20, 40 day and 60 day lookbacks for quite a while. So is the algorithm going to retrace? Possibly. See, we're staying within this range here. We just got 945, and usually 945 is when price actually after the open, price starts to actually do its thing, and we're still inside this range, so hasn't picked a direction yet. How is that look back thing, by the way? I've been hearing about it a lot. Yeah, the look back is I believe month 5. ICT talks about it on the first or second episode of Core Content, month 5. But that's basically a period of time that the algorithm uses to look back on certain data. So on the he teaches it using the 60, 40, 20 day. I also use it on the hourly chart with 1, 2, and 3 days. But you're basically going to go on today's date and look back 60 days. So if you see a market shift, you want to do the look back, because it's possible that the algorithm might be targeting something inside 20, 40, or 60 days. And let's say it's going to target a raise within 60 days. The lowest one would be this low right here. You'd want to see this low get run within the next 60 days. So I would go to today. I'd look back and be like, okay, how many more days until this is out of the picture? 15 days till 60 days, right? So you would look ahead 15 days from now, and you'd expect, doesn't have to be exactly within 15 days, it could be 16, 17 days, but you'd expect this low to be run within that before, like, or around July 17th, maybe the week of July 17th. But it doesn't always have to do that. It needs to first show you that it's willing to go down there, and that's why I often use it when there's market shifts on the hourly chart, especially. Like I used it this week on Monday. I had on my weekly analysis. I'll pull up the picture. No, wrong week. And so on this one, you can kind of see that I have Wednesday 1800 marked. This is because that day we created a market shift. So I look back 3 days, I look forward 3 days. The 1800 opens. That's another way I kind of use it. And this just data within the previous 2 days. This is something I'm more forward testing, not something ICT taught. But I believe since that price is fractal, that the IPTA data ranges probably work on many different time frames. But the idea is on the daily chart, you're just using a 20, 40, 60 day look back. If you want the indicator for it, it is ICT IPTA LB table. I don't know by who. By 2 degrees. So it just gives you percentages. You can also have it show you something else like boxes if you want. Yeah, look back. I think it's fractal. Like on the hourly chart, I'd be looking back 72 hours or maybe 60 hours. And I this is something not ICT. It's not something ICT taught, but what made sense to me before was if we're looking back 60 days, that is equivalent to 3 months. And so I would go down to the hourly chart and look back 3 days. So I use them 2 hours for that 3 days. And if we're looking at, if I want to see, for example, these relatively equal highs, I'd then want to go and look back from now and see, okay, how many bars is it away from 72? We're at, let's say this high right here. Maybe like, let's just say 50 with around, let's just use that high. So 43. So how many are we from 72? 19. And so 19 hours from now, by Wednesday, around Wednesday morning, I'd expect to run these. That's sort of how you can use it. It's not something that's super high probability. Is it going to change your trading? I don't think so. You don't really need it. It's just something cool that ICT introduced that I'm using on the hourly chart. Yeah, so what you're asking is, when you see a market shift, the arrays within the previous 20 days are likely to be hit. Like, yeah, if you see a market shift, it means the algorithm is doing something else, and it's gonna be looking to target something. Don't confuse a market shift with a short term stop out, like on the daily chart, short term low. Really, if you really know it's a market shift, and price is now in a bearish order flow on the higher time frame, and it's gonna go lower, then yes, it's gonna target something, and you can find that thing using the 20-day look back, 40 or 60-day look back. That's in essence what ICT taught in the month 5. And see, price is still pretty boring right now. I haven't went into the lower time frame much because it's not very exciting. I mean, it's staying within that range. I'm not seeing any space, distance and space between these highs and lows that we could use to then form order blocks or breakers. It's just coming from discount, premium, and then consolidating within 50% of that range. What have I watched from ICT? Let's go see, because I won't be able to tell you everything off the top of my head. Let me pull up his channel. So I've watched all his recent live streams more than once because I missed them. But charter content, I watched everything but the last months. So the first couple months I didn't really watch them because it's very simple. But I watched month 5, 6, 7, and a little bit of 8, because those are really big months in my opinion, and a bit of 12. I watched 2022 mentorship. The end series, I watched some of those. That's a really good one. If you have a model of, once you're done learning how to trade, this is a really good series to watch. I haven't watched all of it though. There's the last videos I need to watch, just 4 videos, but basically just talks about how to set up your finances and your business and your life and your goals in trading. I watched the micro market structure and time price. I watched the Forex Scout Sniper Basic Field Guide. I watched Mastering High Probability Scalping, Market Maker. This is my first playlist. Where is it? This one, I see Market Maker Primer Course. And then if I could go back and tell myself what I know now, pattern recognition, optimal trade entry, and I don't think I watched that one. And of course, I watched 2023 mentorship. That one's the one I watched the most, 2023 mentorship, and the longest one. I watched most of these videos more than once. I had to, especially as he was releasing them, because it's hard to keep up with. He was introducing a lot of concepts that I was unfamiliar with, so it demanded a lot of time. But I had the time, so I was able to put the time into watching all of them, and yeah. Most people though don't have time to watch that while it was being released live, because it's, as you can see, some of them are like 5-6 hours. If you have a day job, it's hard for you to watch a 6-hour stream. So we break down into this imbalance. This one down here. Now, I'm not expecting higher prices or lower prices again. We're in a consolidation. I would expect if we go from high to the low, I'd be watching that red line there, the 50%, and expecting price to continuously gravitate to that level until I see a significant sweep on liquidity, either high or low. So the best thing you can do is just stay on the 15-minute chart and just wait for that to happen. But for the sake of just trying to read price, we're going to go down to the 1 minute, because there's a lot more PD arrays that we can look at, and a lot more moves that we can look at on the smaller time frames. But I'm seeing this imbalance versus price, and maybe bounce between these two for a little bit. I want to see if one of them is going to break. That could kind of help me determine where price is going to go next. Let's look at the S&P. So the S&P is much lower, and Dow is much lower. So immediately when I see this, I don't like to be bearish. I always hate it when the Dow leads. It usually will create very bad price action if we're going to go lower. Usually it's always the Dow that will then agree with the Nasdaq, and if the Nasdaq, as it's going higher here, I think that Dow is going to be forced to go higher, and Nasdaq's usually the leading index, making those lower lows, higher lows, while the Dow makes lower lows, and the Nasdaq making the lower highs, while the Dow makes the higher highs. So I would prefer to be bullish here, have the Nasdaq lead, and as we close above this gap up here, I want to be careful that this isn't a sweep on liquidity, and that this is going to expand higher. I'm watching this 30-minute gap, see if it's going to reach up into there. There's no trade ideas I'd want to take higher if I was, say, trading live today, because midnight open, as you can see, was all the way back here. So we're way above midnight open, and in my opinion, way too late to look for longs. But we could see shorts. So this is a really quick sweep. I don't really like that. If you go to line chart, it still looks like nothing was ran. There was no highs and lows that were taken out. So I want it to close, why aren't you? No, go back. So I want it to close above these highs or lows to show me a significant sweep before picking a direction. 1 minute till the close of that 5-minute candle, and it's reached up into that gap. So if the steam is willing to kind of blow off a little bit, it's going to slow down. I'd want to see a small 5-minute candle that leaves a fair value gap. That could be used as an order block, because we're in a big premium and we've taken a form of liquidity, the fair value gap here, and so it's possible to see it run lower now. But like I said with the Dow, because it's already had gone lower, I don't really like to see it go lower. So nothing in a live account I would be comfortable taking for lower pricing. See that high there, a 5-minute high? I'd expect this high right here. If price wants to get above that, that's somewhere I could go short if we're in better conditions. Because for this trade idea to pan out, I want to see a small 5-minute candle that creates an order block, which means it shouldn't go much higher than this high. It's in a big premium. In fact, I could be just shorting right here, but that's not my model, and it's against a lot of the things that I'd want to see for this trade to work perfectly. So I wouldn't be taking this on a live account. But let's just try it, and we'll go short here. And if I had to rate this trade from 1 to 10, I would say the probability of this working, I would say, is like a 3. Because it could easily continue running higher and run out my stop. Yeah, the Dow does its own thing, but I think it's important to look at it because, like I said, right, the Dow is the slowest index of them all. That's why it looks like it's doing its own thing, but it still has a lot of the same companies, so it'll still sort of correlate and follow the Nasdaq. And if you see that the Dow is falling, you're never going to see the Nasdaq agree with the Dow. Almost never. That's why this trade, if it works, it might just work as a retracement, but I wouldn't expect it. I'm not saying it won't, but I wouldn't expect it to really go lower with the Dow, because the Dow is always going to kind of follow and agree to what the other indexes are doing. You'll almost never see a scenario where the Dow's going lower first and then the Nasdaq submits the Dow's will. The bigger index is the Nasdaq, and it has more power. I'm not saying it won't happen, but most of the time, whatever has the most money, whatever moves the most, has the biggest impact on these indexes, is going to, yeah, the Dow is delayed. It's basically delayed. So the fact that it's going lower, you can think of it as the Nasdaq going higher, the Dow eventually agreeing to the Nasdaq. Now the Nasdaq might choose to go lower, and it might make the Dow go even lower. But usually you're going to see later that the Dow is going to, again, not all the time, but most of the time the Dow is usually going to then go agree with the Nasdaq and start to follow the Nasdaq and submit to the Nasdaq's will. But recently on the daily chart, you saw the Dow went much lower, and while the Nasdaq was going much higher if you compare the two daily charts. So as the Dow was dropping, the Nasdaq was going lower. Eventually, as the Dow really dropped, the Nasdaq had to go lower momentarily. That's basically what I'm expecting from this trade, maybe a small retracement, because the Dow is really going lower and it's not really showing it wants to submit to the Nasdaq's will. But these aren't high probability trades that you want to take part on. So I hope no one is taking this on their own account. yes, the hierarchy is Nasdaq, S&P 500, and the Dow, because you'll see if you look at opens often, the S&P is usually gonna, Nasdaq oftentimes gonna go higher, and the Dow is gonna go lower, and the S&P is just gonna consolidate because it kind of uses the two. This is somewhere I could add more. It's a short-term high that we got above, so probably will run out my stop though. It's probably too tight. I don't want to expand it, or it's just going to continue going higher and I'm completely offside, which is possible. But yeah, I got stopped. So now we'll just study how this candle reacts. It could have just wicked me out, and my stop was just too tight. We'll wait to see if we see some displacement, and if we see some displacement, I'll try and get back in. See how that 5-minute candle formed? This candle here, I want to see it form an order block on that candle. So break of that high could go short. This would be a better place to go short, but I want to see it form an order block on the 5-minute chart. So I'd be expecting violent lower prices here. We'll get back in. This is all paper trading, by the way, for anyone that... Yes, I have gotten a payout before with Top Step. I'm with Apex now, though. Haven't gotten a payout with Apex yet, but working my way towards one. I'm not really seeing what I want to see. It came all the way back. Again, I want to see very aggressive lower prices to form that order block. So I don't like how it came back. And I'll probably, if this gets stopped out, I have until like 10:30, 10:45. So I'll probably stick around till then for any questions, but I'll be done trying to take anything on this paper account or even on any live account. Just any trade at all. Because it doesn't look like it's going to work. I was trying to time a high, but yeah, it doesn't look like it's going to work. There you go. Okay. So two L's. That's what happens when you try and trade in bad conditions. I want to see though if it still will make that high, and I'm not gonna try and get in on anything else, but it might still create a displacement and then show lower prices. So just watching to see if that happens. See what the S&P, yeah, the Dow's starting to go higher now. It's a nice fair value gap. I don't know how I feel about the S&P. It's looking higher more than, like, it still needs to run out this high. So I'm seeing that small displacements being created, forming the 5-minute order block that I was trying to time. So now is where I could, go short, but looking at the S&P, I don't know. This could just be a run on stops. That 5-minute fair value gap price could just be trading back into it. It's also why I was trying to time the high, so I could kind of take profit around that 5-minute fair value gap. Then I wouldn't have to worry about whether or not this 5-minute fair value gap would support price. Yeah, been real nice if I could have timed that high. I got stopped out. So here at this point, we're constantly encroaching from the 5 minute gap. If I had still been in this trade from up here, the short, I'd be 50% out at least. Let's say I had not taken this first entry and just kept the 15 to 20 point stop loss. Be about 30 points, around 35 points, 50%. Not bad. Now, I don't trust this 5 minute gap to work. And I don't know how I feel about actually going short now would be better, but again, because of the Dow, nothing I'd take on live. Like, this is just too beat. Yeah, I like the 2 minute fair value gap. Bullish SMT with S&P. Yeah, I don't like how the S&P looks for it to go lower. It looks like it's as like the fair value gaps down here not having gone above that high there. It looks more to me like the S&P is wanting to go a little bit higher, but you might be meaning bearish SMT with this high not getting ran out. Like for the S&P, I want to wait till more things fill, like this fair value gap down here, that order block, maybe use this reclaimed order block to trust it more, and then run out this low. That would be a higher probability. So like maybe if that happens this afternoon, we might see conditions where I would be comfortable placing trades with the real account. But right now there's just it's two-sided. Yeah, you're talking about the 5 minute BTC high on NQ. Yeah, exactly. NQ is trading inside this 5 minute bullish fair value gap, but the S&P, this one's much lower, and so could it draw lower into it? Yep. And the Nasdaq may, with all this consolidation, may come back. There's a lot of things on the Nasdaq order block, fair value gap, the consolidation itself that could be used to support the Nasdaq, but it doesn't have to trade into here, in my opinion. It can. It's just that we're already being held by this one. So if we're gonna go higher, this one should probably be the one you want to look at the most. See if it's gonna run rapidly here. If we're gonna continue seeing lower prices, I want this 10-15 candle for its low to be broken shortly, preferably on this current 5 minute candle, because I want to see these down close candles be traded through and the up close candles resist price. And so I don't like how we're sticking around here. I want it to really give it up and draw lower off of the 2 minute fair value gap we're in right now in this last minute of the 5 minute candle. If I was in a trade from that 2 minute fair value gap right here, like that's what I would want to see. If I don't see that, I'd start to think about taking something off, maybe moving my stop down so there's less risk. Whatever I can do to minimize the risk, because the probabilities are starting to uh, lower. Like when we create these large candles, if we leave a fair value gap, you usually want to see price, if it's going to go against that, like this candle that initially went short on at 10:05. I wanted to see it push up against this 10 o'clock candle, because that would be showing that we're no longer wanting to go higher. But because it closed higher, this fair value gap's a lot stronger, because it had 3 candles that formed it all going higher, showing a lot of momentum going higher and no willingness to reverse. So as we're going lower, we get a candle, the next candle immediately pushes up against that down close candle. It's not a good sign. You usually want to see it continue to go lower if it's going to draw lower, right? But we didn't see that, and now we're sort of pushing up against it, and this is where you probably start to take inverse fair value gaps long if you want, because it's looking like this high is going to then get ran out again. However, this could also be a bearish breaker. It could be setting up a bearish breaker for later lower prices into the 11 o'clock and maybe lunch hour. And this rejection here is probably going to, anyone that's shorting this fair value gap, the high there, anyone that's showing the order blocks, anyone that's seeing these highs as support, or sorry, resistance, it's initially going to work for them, but I wouldn't trust it right now. Unless it wants to be very fast down lower, then sure, but it's looking like it's just doing this to create more liquidity higher to get people into longs. I remember when I was first starting to trade, I'd be looking at fair value gaps and I'd be looking at order blocks, and I'd see price reject them, and I would go short as it was rejecting them on anticipation that it's going to continue going lower. So sometimes price will initially reject certain things that it shouldn't, like that fair value gap there, just to create concern that it will, fear of missing out. This level up here, I believe, is an hourly bearish order block or a 4-hour. I don't know what this line is. What is that? Oh, it's the daily fair value gap. We could rebalance. Probably color code it in white then. Looks like it might form a mitigation block instead of a breaker, but potentially this could be a first stage market maker sell model. If it doesn't go up and create that breaker, I'd wait for the second stage to have higher probability. That's what I did yesterday on the trade that I took on my funding account. I waited for that second stage delivery. But yeah, so right now on the 5-minute chart, you see it could still be creating a high, low, higher, high, and the breakers from the low to high. So we could have formation of a bearish breaker. Or no, high to low, that down close candle right there should be the bullish bearish breaker. Now here's where I could go short again as a total soup entry. But if I was on a live account, I'd wait right here until I see some displacement. To really start that market maker sell model, because now we have a breaker. So if it's gonna go lower, it's now. It's gonna start to create or bearish order flow right now. This should be the high within the next 5 to 10 minutes. The high should be priced in. That kind of gives you an idea of where your stop loss could be. So we have this as a total soup short, because I already failed going short back here. I'm just gonna study it. Anyways, I have to go pretty soon, so I don't want to get into a trade anyway, and it's just a paper trade, so it doesn't matter. But the logic is that we have a bearish breaker that was formed with the break of that high, and we could be setting up to go lower. On the higher time frame, it does look good. I would want this, like I said, right, the down close candles to be traded through. So if we're now in bearish order flow, I want to see really violent, fast price action lower through this previous down close candle at 10:15 to continue trading lower back down to a discount or midnight open. But I need to see some displacement on the 1-minute chart to solidify that idea. If it's going to stick around, it could keep going higher, keep climbing higher, and just keep doing these mini retracements to get people short. That's something you have to be careful with, because if you're going to have a large range day, it'll often do these mini retracements in the beginning before really taking off to sort of just build up the amount of counterparty to the smart money longs. So you have to be careful with that. I didn't do this morning, but I thought London session was pretty large. Let me just compare it to previous ones. It's not so large. But it did trade. You know, you've heard ICT say that if London trade beneath the Asia high and low, you don't want to trade the morning session. That's not always true if London consolidates, but here it obviously trended. That's why I chose to stream this morning, because I knew that anything I tried to do would likely be a lower probability. And yeah, I took losses. But these times are also the best times to learn about what you did wrong and how to avoid it. So I'm going to stay until that close of this 15-minute candle, until 45. I really want to see if it's going to start to expand lower with speed. The first model I ever traded that basically got me profitable and got me funded was wait till price gets on a premium in a 15-minute chart, hit a premium or discount PD array, or just be in a premium or discount above sell side liquidity or buy side liquidity, and look for a 5-minute shortener high to be run out, which is this one, and then short the first 1 minute or 30-second fair value gap in the range. Then you hold for, you have a 12.5 point stop to 15 point stop and 10 point take profit. That was my first model ever. That is basically Cameron's model that got me profitable. And sort of, well, the first time I saw some consistency and success. Here would be Cameron's model. Got about 6 minutes now to the close of that 15-minute candle. It's really not showing it wants to go lower as of right now, but we'll see if it's going to start to pick up off this fair value gap. I really want it to, and it seems like it is. Yeah, it doesn't look like it's going to want to go. Well, it's not about 4 minutes left. It's not really looking like it's gonna want to go lower. So I'm probably gonna end the stream. Uh, just to reiterate, for my streaming, I don't plan on doing this regularly. I only will stream on the days I don't want to trade, and I deem low probability. I want to tape read slash paper trade. That's what we did today. So don't maybe Wednesday I might stream again because no, it's tomorrow. No, tomorrow should be fine. Yes, I don't know. If I wake up and I see like I expect very bad price action, that's when I'll stream. Because when I don't feel comfortable streaming when I'm placing real trades. I really need to be locked in, and I just don't know if I can do it. I don't want to try doing it while streaming to place live trades just because I know people are watching me. So I just prefer to just do that on my own without anyone watching me and then post the recordings afterwards. But yeah, like since I do have people that watch my videos consistently and I had a lot of interaction today in the stream, I wouldn't mind doing it more often on those very bad price action days. Yeah, but thank you for everyone that is still tuned in and still watching. So I got 1 like. That's okay. I don't care about the likes. But oh, actually, it is picking up a little bit. Oh, yeah, it does look like it's gonna run. It needs to really keep going. I don't want to see now. If I was in a trade from up here on this fair value gap, right? I could have waited till we got above that high, but if I was on a trade here, I wouldn't want to see these down close candles be traded through, especially since we're near that close, the 50-minute candle. I wanted to mostly stay lower, so I'd move my stop down to like here, break even. I don't expect to come back, and I don't want this gap to fill here. This bearish gap should hold price. I don't want that to fill. I want it to stay open and have it continue driving lower. Let's look at the S&P. S&P drew a bit higher. The Dow is now back to going lower. So NASDAQ might start a smaller tracement here. But yeah, this would have been the better trade to wait for instead of trying to time the exact high over here. Still low probability though. So hopefully no one took anything that I took on real accounts. I wouldn't be able to forgive myself if you guys did. We got 1 minute left before I gotta go. As long as the 15-minute chart from here on out ultimately stays lower, doesn't trade back above any more candles high, and you should continue seeing lower prices. And you'd want to keep going with that idea, which means that your stop loss should be around these highs up here, around like 19,000 to 19,900. Let's see if it's gonna work for 20 points. Come on. If it starts to retrace, I'm gonna end the stream. Just want to see if it's gonna get down there. Well, thank you very much for tuning in, and I'll see you next time. Maybe tomorrow, because there's no news tomorrow. It's possible we have a bad day. No, isn't it holiday? I don't know actually. No, it's not a holiday. That was last week. No, actually, there is new home sales, so it might actually be nice. I don't know. We'll see.